Hi, this is Kyle Markham with International Futures Group in Chicago, a division of EFG Group. Wanted to just do a brief grain market summary for today, Thursday, February the 12th. Obviously, we're on the heels of our USDA report where we saw lower carryouts on corn and soybeans. Obviously, on a global scale, there's still a lot of both throughout the world. The report action I thought was a little confusing. Corn initially tried to show strength and then sold back off, and the same thing can be said for beans. For me, looking at the recent activity in soybeans, obviously that's about as muted reaction on report day that we've seen in some time. I think that what was interesting was that when we started to trade lower in the meal and we took out 27.5 in the March contract, you would have thought we see some significant movement towards that 322 level. Obviously, the market has already bounced, and I think it's just a lack of follow-through. Obviously, you're seeing also what the spreads are doing. Outside of that, I mean, when you're looking at soybeans, we traded 986 on the report. We traded 985 today. I believe we're going to go up and test that level in the overnight. I also think there's probably stops above that 86 level, so keep that in mind. One thing to think about, though, is when you're looking at soybeans and the volatility. Soybean volatility right now is at about 17–18%. That's very low, and obviously volatility being a measure of uncertainty, market seems pretty comfortable right now and doesn't appear to want to go anywhere of any significance. Moving on to corn, I don't think it's anything more than a trading affair. I was actually impressed with the corn exports this morning. I thought over 1 million we'd see the market rally a little bit. I don't know if the action was more indicative of buying oil seeds, selling feed grains today, because neither corn or wheat could really get anything going, even though we did see decent exports, and we also had a weaker dollar. So I think we're still just in a digestive phase. Volume hasn't really been anything to get excited about. Moving forward, I think we're going to look at 380 to 395 in the corn range. I don't think there's anything that's going to change that in the near term. With the beans, we're basically 965, perhaps 990 on the upside. But we need to watch this meal market, because I believe everyone was looking to the downside, and we couldn't get that to materialize. Corn volatility at 19%, also indicative we're not going to do much. Wheat's a little higher at 31%. Obviously, there's a little bit more geopolitical aspect to it. I would be watching that wheat-corn spread. We've done very little in these last 2 days, but certainly it's trying to stabilize. So keep your eye on that. If you've got any questions, give us a buzz in Chicago. Again, this is Kyle Markham with International Futures Group in Chicago.